DR fam, hope everybody had a great Friday. Looking forward to a nice weekend. Let's see what we had going on in the market today as far as DR goes. And want to pull up, I'm looking at the daily chart right now for ES because I want to kind of continue that conversation we had yesterday and yesterday's video about looking at the higher time frames. And if you guys remember, one of the things that I said when I was looking to have happen is for this is our yesterday candle, and so what we wanted was price to move up and then actually head into that fair value gap and then reject off of that, right? And so what you'll see is we almost got there today, right? So that was the bottom of that fair value gap is around 4,400. And so if you look at it, we, like I said, we almost got there. We got to about 42.92 today. So we got about 8 points away from that fair value gap. And like I said, what I'm expecting, or what I would expect to happen, all right, I mean, it's going to happen, but based on back testing and historical price action, like I said, I'm expecting price to go up. Potentially, I wanted to hit that weekly fair value gap, okay, and then I wanted to reverse off of that, okay. Now let's look at. Let me come out of that for a second. So that's our daily. If I back up to the weekly, now interestingly enough, and I didn't look at this, guys. Wow, and I should have did this yesterday. So this is real time action happening here. Want you to notice something. Get rid of that. Okay, so we see our daily fair value gap. We also have, we are in the middle. We are actually in a weekly bearish fair value gap. All right. Now here's the part that again you want to look at. If you look at what happened, we actually are in that fair value gap. So what I didn't do, which is what I should have done, and I'll take you guys on this journey with me here. What I should have been doing, what I should have actually put should have put my another fair value gap here on the weekly side. And let's make that a weekly bearish fair value gap. Boom. So that's what we should have seen, and that's if I was paying attention yesterday, I would have done this yesterday, because we actually did go into a weekly fair value gap, which is actually stronger than the daily fair value gap, right? So now that might change a little bit my thought process. I still want it to go up above this weekly fair value gap and come back down, but here's the thing. This week is over, right? So Sunday we start a new week. So guess what? Now I actually have a new fair value gap on the weekly. Let's get a weekly. I'm sorry, not a weekly. I mean a new buy side. So now I have a new buy side that's right there. So based on where price opens up on Sunday into next week, I might take this weekly. I might take this weekly out. Then I might actually go up to these weeklies up here and take those out. But again, I'm still inside this bearish fair value gap. So at some point, a lot of times we'll wait till price gets to the middle of that fair value gap for it to make the move back down. So we'll see what happens there. So what just happened, honestly, was what I would normally do on Sunday. Is I would go in and go start from the monthly down to the weekly and then down to the daily. So you guys got a free version of my Sunday night chart prep. All right. So hopefully that's helpful, right? But you guys can see it there. And so we're mixing up, we're mixing in some of the stuff we do at ICT into DR as we normally do. All right. So now that changes our model a little bit. All right. As far as where so you see those I don't call that's like kind of reddish line. So now that's our those are our weekly fair value gaps. That lighter red up there is our daily. Okay. So, all right, but let's talk about today. And again, I'll make this one quick because today it wasn't easy. And it was actually a scalping day. It was not a set and forget day. We only had, we had a couple of DR moves, but they were like 4 point moves. They weren't like a minimum of five. If you were playing it strictly off of the the top of the DR or the DR high, which is where where our setup was, our confirmation was. So interesting thing here, right? So let's look at what we had today. Now we had a range. This range was pretty wide, and we were at 43.58, 83, so almost 30 points, maybe about 25 points on that range. Now the cool part was, and I posted this in one of my groups. We had this movement coming up here, and at that point, if you look at where the top of that DR was at that point, that top of that wick, this was about a 19 point range, right? So from here, where we started, to here before 10 o'clock, that was about 19 points. And so my comment was, all right, 19 points, that's normally a DR range is, somewhere in that 16 to 20 plus point range. 19, we're pretty close. So what I'm expecting to happen is that price will, reverse, right? Or have a drop. What I wasn't expecting was for it to make this quick move up and then just fall off the cliff like that, right? So this one, I actually put that in my group, and what I ended up doing was I just took a gut move on this one, a gut trade, and so I got in at 43.80 and got out at 43.70. So 10 points off of that move before as DR was setting up, because again that was just my expectation of what was going to happen. So that made the day a lot easier. Wasn't really trying to force anything, but I'll show you where we ended up. So we got, now one thing we did have was a pretty big range between IDR and DR on the high side, right? And so that's 75 up to 83. So that's what 8 points. So that's a pretty big range there. Normally we have 3 points maybe between the two. So you got to be a little more careful with this one, because a lot of times when you have IDR, you can actually use it as a precursor to what's going to happen with DR, right? So if it closes above, like these close above IDR, you can expect that it will close above DR. But in this case, DR is so far away, it took a while to get there, right? So if you're being aggressive, what you could have done, and I did not do this, what you could have done is actually take one of these trades somewhere in here, and then let it go above DR, right? I've done that in the past. I just did not do that today because, again, I already had 10 points on the other side before, and so I wasn't really that, wasn't that stressed about trying to, get more points for the day, right? So, but you could have done that, right? Because, again, that range is so big, it's going to take a second for it to get up there. All right, let's just have a huge spike, all right? But, we did not. We had a slow and steady move, a little bit of a retrace there, and then a move back up. Oh, excuse me. Okay, so we finally confirmed high here. All right, no, sorry. I'm sorry. Let me go here. We confirmed high here, and then we went up a little bit more, had a retrace, and we retraced right below DR high. Okay, make this a little bigger so you can see it. Okay, we traced right below DR high here. Order on DR high. And again, that was, about 83, and this went to about 87. So about a 4 point move here. And one thing that I want you to look at, and this is where sometimes we get caught up in some things, because what I was noticing was we had equal highs here, right? And then we start coming over here, we had equal highs here. So to me, that's a trigger to get out of the trade, right? If I'm in it as a scalp, I'm getting out. Because if I don't break that high, I know I'm going to reverse off of it. Okay, and so a lot of times we'll get those equal highs, and price come down a little bit. And you're like, oh, it's going to move back up, but it doesn't. It does this kind of move, and now you're stopped out. All right. So again, this was a scalping day. It wasn't a set and forget day. And part of my rationale for that was kind of this kind of move here, where again it went up and then it came down. And this was the second trade, right? I'm sorry, went too early. That was the first one. The second one was the same kind of thing. We went back down here. Oh, I'm sorry. What am I talking about? Man, it's Friday night. I can tell. All right. Anyway, let me back up. Okay, that was the first move. Then we retraced. This is the first move. Okay, so that's your 4 points here. Then we came back down. We never got back down to DR or IDR, which is what I was hoping for, because now it's been a nice move back up. So we didn't get there, but again, kind of that equal lows in this case. Could have been opportunity, because again, we have such a big range between those two. You had opportunities here as well, just like you had over here, to kind of take that ride up. Now here's one tricky one. If you would actually took, so price came back up to DR high again right here, and if you would have actually taken that trade, you probably would have got stopped out. Let's see, 83, maybe it would have been, if you got a 5 point 83, yeah, it would have been close, or you probably would have got stopped out just at the bottom here. But again, if I look at these moves and I see what's happening down here, we got that same kind of that same sort of equal lows in this case, like we had equal highs up here, equal lows. So same thing, right? That's a nice reversal signal for me sometimes. So you see where you could, as you're following the trend, you can see what happens here, right? Again, that's being aggressive, right? If you want to be aggressive, you can do those things. In that case, if I would have done that, I would actually had my stop right below the IDR. Instead of a normal, 5 point, I would have just had probably about a 3 point stop loss, just to protect myself from the downside, right? But this is, again, part of, understanding what your strategy is, how aggressive you want to be, what your risk tolerance is, or what your risk management strategy is, depending on if and how you would take those kind of trades. All right. So we get back up here again, another, just not a lot here. This is probably about another 4 point move if you're on the DR high, if you took that trade. And then you kind of get this movement here, and then you finally, if you'd actually held on, if you kept taking those trades, there's finally one that actually now it works for you, and that's a legitimate. If I was a 10 or a let's see, 83. No, about a 9 point move if you had taken that one. Okay, so not an easy clear cut day. Couple of scalps you could have taken. Again, depending on how aggressive you would have been, you wanted to be, you could have made some moves there. Why is that buy side weekly? You're there already. Oh, I know why. I need to move that over. Sorry, never mind. That is actually the top of the buy side. Okay. But that's it, guys. I mean, at 3 o'clock we had that move down, and that move, of course, was kind of expected, because we have been moving up most of the day. So you had this move down. No trades there. Would not have played around at all there. Get after 3 o'clock, gets kind of sketchy, so I don't really play around too much there. So all in all, not a clean day. Depending on how aggressive you were going to be, you could have had some opportunities, but definitely was one where you had to be kind of stuck to the charts today. So I wouldn't call it a A+ day at all. This is probably a C day in DR world. You guys know the A days where we just kind of get in and let it ride. So anyway, that's it, guys. This is much longer than I thought it was going to be. That first part kind of took up some more time, so I apologize for that. But as always, hope it was helpful. And like we always say, love on your loved ones, because you never know when you won't be able to do it again. So take advantage of each and every opportunity. And you guys have a phenomenal weekend. We'll kick us off again on Sunday. We'll still do some chart prep on Sunday, see where we open up, and we will go from there. Guys, have a great one, and y'all be easy.